Okay, so this is kind of a little bit of trickery, but I included a tax return problem for this chapter. Even though there's not an assignment, a tax return assignment, I actually put this into the regular assignment. So it's a tiny one, it's not a big deal, just getting our feet wet with the idea of preparing a tax return. So, we did just recently learn about that simplified tax formula. So, what we're going to do is we're going to look at a problem, a scenario where this person only has a W 2, and we're going to calculate his refund or tax due based on using that simplified tax formula like we've done all chapter. And then what we're going to do is put it into the tax return. So, that's all we're doing. Really simple. Now, our example that I'm showing you right now is just a W-2. However, for your problem, you actually have a W-2 and interest income. So not a big deal. I will show you where that's going to go and show you how that will be different. Okay, so this is Alex Montgomery. He's single. There's his address, social security number, all that stuff. Just got a job. He just graduated high school, got a job. So he has a regular old job. And we know with regular old jobs, that's a W-2. Let's see if I can highlight that. Nope, I can't. I can highlight literally everything but the, the word W-2. Okay. Anyway, this is not an actual W-2. Clearly, they just kind of put all the numbers together on one sheet, but little table here. But basically, it is. It's the detail of the first 6 boxes. Now, technically, I think we go to like box 14 for federal information, but these are the important ones. So we see the first one, which is box 1. That's wages. It's technically federal taxable wages, what they shortened it there. So basically, what we want to know is that is income. Now that's income, and there's a whole section on the tax return for income. It's going to go right on line 1A, just so you have that line right there. Awesome. Okay, the next box is box 2. That is withholding. So let's take a look at that WH there. That means that, oh, wrong thing. That amount was withheld. So you know what that means, right? So from your paycheck, you've got gross income, and then they withhold things. So they withheld a total of about $9,500 from Alex's check. And that means that is really considered what we call in taxes, we call that a payment. So he's already made, that's not typing, let's try it again. He's already made a payment towards his tax liability, right? So it's slowly throughout the year, he makes this payment. This goes on line 25A because it's a W-2. So we'll see it on, yeah, sometimes it doesn't like to show my extra information there, but there you go. It's line 25A. We'll get to that in just a minute. But you'll see that will go against his tax liability, right? So awesome. Okay, next couple of things just want to mention really fast. Social Security wages, Medicare wages, those are the same for this problem. Those are the same number. That's because there's nothing special for this tax return. If you took the payroll class, retirement, health insurance, those types of things can change what's taxable for federal income tax purposes. But for this, he just made this money, and he had this withheld. So as required by law, we know 6.2% for Social Security up to a maximum. Maximum amount for 2025 is 176,100. I'm saying that from memory, so hopefully that's right. $176,100. Once you've exceeded that amount of money, you don't have to pay the 6.2% anymore. Now the 1.45 that I just typed in without explaining, that is Medicare. So that amount for this problem is about $1,100. That is 1.45% of the taxable amount right there, that $76,000. That 1.45 is taxed on all income. You can make $3 million and you're still going to pay 1.45. Now, technically, once you exceed $200,000, you will pay an additional Medicare. I think it's, I want to say 0.9. So you'll pay a little bit more. So it's kind of the reverse. Social Security, you stop paying after you make so much money, and Medicare, you actually pay more. So yeah, it's kind of weird. But if you want to know more about Social Security, which is the FICA, Federal Insurance Contribution Act, You learn about that in payroll class. We learn about that in 201. I could go on and on about it, but of course that makes this video even longer. So what I need you to understand, because this is a very common question that we get and a common incorrect thought that we get when people do taxes. So what happens is your client comes in and they are thinking, okay, look at, here's all the tax that I had withheld from my paychecks. So here's a withholding, here's a withholding. So they're going to come in and they're going to be like, okay, I had about 10,000, about another 5, 6. So I got about $16,000 that I had withheld. And they're going to say, okay, how much am I going to get back? Well, first of all, what we have to make sure people understand is that Social Security and Medicare are not taxes that we reconcile like we do on a tax return. Well, I got to say there's an exception. Social Security, there is a little bit of something we do. But for the most part, when you pay in Social Security withholding and Medicare withholding from your paycheck, from your income every week, that is not money you're going to see again until maybe you retire. Right now, Social Security and Medicare, it pays for old age survivors and disabled individuals. So OASDI, that's what it stands for. So we're paying for those people to receive some of that income. So money goes into a bucket and it goes back out to other people. Now, I said there's an exception to that because, like I said, there's a maximum for Social Security. If you have more than one job, you're going to be taxed at 6.2% up to $176,000. But if you have more than one job, one person, not married people, they still are separate, but one person, if you make over 176,100 in those two jobs, then when we go to do your tax return, we can reconcile that and the overpayment of Social Security can be refunded. Okay, that's kind of an unusual situation, but it does happen. Okay, so we've already done this before, but we're going to go through it again really quick. So we know that what we do is we take income. In this problem, it's 76,000. I got to remember 76,000. Let me scroll up from this other page here. 76, 344 and 81 cents. Okay, now for a tax return, we do not show cents. So anything above 50 cents, we round. So obviously this one, it's 81 cents. So we're going to round that to $45 instead of 44. Okay, that's going to go on line. Oh, let me do it like this. 1A. Yep, it did stay. Okay, so that's going to go on our tax return. That's our income. Okay, the next thing that we've already learned is that we can subtract, because he's single, we can subtract the standard deduction. I don't have the line number on this, but I do. I think it's 13, 14, 15, let's see, 12. Wasn't even close. All right, so line 12. Let me add another text box here. This is the standard for single. So all right. Okay, so once you subtract those amounts, the 76,345, and then you subtract 15,750, we're going to get 60,595. We call that our taxable income, Now that's line 15, and you're just going to see that's a mathematical line or mathematical thing that we do on our tax return, but that's a really important number, right? So let me highlight that. Let's go with pink. All right, so taxable income, that's when there we go. That's when we take this number and we go, here we go. Try to use one of these lines. We go over here to the tax tables, right? So as long as we have under $100,000 of taxable income, we can use the tax tables. So I looked for the one that said 60,000. So now I just have to find where that falls. So I'm looking for 60,595. So that's going to fall right here. 60,595 is going to fall between these two numbers, right? At least, but less than. And because we're single, so we're going to look in this column, this very first column, we get $8,241. $8,241. That didn't type. Let's try it again. Okay, so that's our tax, and that, oh, the dog's barking. That is our tax. Oh, let me add to that. I'm so sorry. If you have a dog, your dog is going to be going off. All right, that's going to go in line 16 on the tax return. So that tells us how much our tax liability is. Now, remember, think about it. If you're Alex, someone's telling you that you owe $8,241 and you say, wait a minute, I already paid in on my W-2. Look, I've already had money withheld from my paycheck. So I highlighted that in green, right? So this $9,527, that's a payment. So I say, okay, I want to show that down here. So let's put that right here in this box, or this line, I mean, and we did this before, of course, 9,007, and we're going to round this number. So let me see, it was 9527. I think it was 31 cents, right? So we're going to take off the 31 and we'll just keep it at 95.27. So let me go ahead and circle that in that green so we remember where that came from. That came from our W-2. So that is our withholding amount. And let me add the line number. So that's going to go under a payment on the tax return. It's showing as we've already paid in towards our bill. So here's the deal. That's line 25A, by the way. Here's the deal. If you owed $8,000, we'll just call it $8,200, but you've already paid in $9,527, that should be a comma, not a period there, then that means you have overpaid, right? You paid too much. So we go ahead and we subtract those, and what we're going to get is we're going to get a negative number. That number would be, scrolling to that, 1,286. So it shows as negative, which means it's a refund. So it's an amount due to us. So, or to Alex, I should say, right? Oops, let me see, I'm clicking out of the wrong thing. There we go. So, and by the way, that goes on line 30, I'm not sure, is it 30? I think it's 34 through 30, well, technically 34 through 35, but there's a line 36 too. So let's just say well, it's not going to show all that. Let's just say line 34. We'll figure it out from there. Like I said, it wasn't even going to show up anyway because it likes to give me a really hard time. I don't know the trick to that. So, all right. So we've already done this, right? We have done the simplified tax formula a few times in the chapter now. And I did mention some line numbers, but now let's actually look at the tax return so that you can see, some of you, it's the first time looking at one, but you can see where these actually show up on the tax return. Okay, so for some of you, this is the first time looking at a tax return. Hopefully not the first time you've ever looked at one, but maybe the first time you've looked at it in this much detail. So let's kind of go through the sections really quick, and then we'll get to the detail. So this very top part right here, you most likely will never use. Let me switch colors here. Okay, so that top section, that is for a variety of things, different tax years. There is one spot off to this side. You can see if someone becomes deceased throughout the year, we do have to put the dates there. That does get used, but otherwise the rest of it's not used very often. Okay, next section would be like address, name, address. Make sure this name is exactly as it appears on your Social Security card or statements. So if his name is Alexander, it should be Alexander here. We are assuming, because the problem only told us Alex, that his name is Alex. So we make sure that's correct. You will see a lot of tax preparers will do everything in caps, all caps. That way they don't have to worry about what's capitalized and what's not, especially for last names like McDonald, right? So we want to make sure we just avoid any confusion. The tax software will accept anyway. It just needs to be spelled correctly. Okay, obviously Social Security number, address, all of that's very important. There's a couple little things off to the left, or I'm sorry, the right side here. One, we need to check as long as the house was in the US for at least half the year, the home that we're claiming. And that's for purposes of like head of household and for the dependency tests, the support tests. So that's important that we check that box. This next area is something that we do talk about in this class, presidential election campaign. So it's really important to know that that does not change your tax refund, but most people do not do that one because they just hate election stuff. So it is nonpartisan, but if you choose to do that, it will designate some of the income that they are earning off of your taxes to go to those funds. So if you've taken a nonprofit or fund accounting class, you understand how funds work. So the income that the government is earning off of Alex's tax return, what is it, like $8,200? He could designate $3 of that $8,200 to go into a very specific fund for presidential election campaigns. Okay. but he does not want that, so we just leave it unchecked. The next section is filing status, and I purposefully have not marked this one yet. That way we know exactly what we're doing. And so for this one, he is single, so we would want to mark that box, put a check or an X in there. And obviously we've not learned those other ones yet, but they are coming. Don't worry, we'll learn all about that. Okay, digital assets, that's e-currency, that's Bitcoin, that's all that stuff. We've got to mark yes or no. For this problem, it's no. Actually, all of them will be no. Dependents, we don't have any yet. Again, similar to filing status. We haven't learned this yet. So it's coming, but that's where we would put all of their information. It's quite a bit of information, but that's where we would put that. Okay, so now we're on to the sections. So let's go over the big part of it first. So there's one section called income. And then when I scroll down, I get to the second page, I see there's one called tax and credits. And then there's one called payments and refundable credits. So just so you know, this tax and credits up here, those are non-refundable credits, but don't worry, we'll learn all about those in chapter 9. Okay, and then the refund area or the amount due. So this is one or the other. You wouldn't have both. And then the last couple of things, if we want someone else to be able to talk to the IRS on our behalf, we need to designate them. So we do a third-party designee. That's often with elderly. That's probably the most common thing. And then we sign. So we include our information in the signature area here, which does include occupation. And if you're curious about that, I want you to consider this, that when it comes to auditing tax returns, there are flags and there are certain things that might alert the IRS to you being a riskier tax return. So for example, if your occupation is something that involves cash, like something as simple as waiters and waitresses, your tax return might have a higher risk of being audited. Same thing goes for people who sell drugs or prostitutes. Both those occupations are definitely going to red flag, and not for the illegal purposes or anything like that, just for the simple fact that they're a cash-based industry. And so that just gives people the motivation to not include all of that income. So more audited areas. Obviously, that very last section is for just people who are preparing the tax return and are paid. Even the volunteer sites that do taxes for free, their information is listed at the bottom just because we are the ones who prepared the tax return. So, and you'll learn about this in, I think, chapter 2, maybe a little bit in chapter 1, that actually paid preparers do have a risk of being fined. So if a tax return, if they didn't do due diligence and verify identity or verify income, those kinds of things, they can actually be fined a certain amount. It's a flat amount. So, okay, so we went over just the sections, right? Now let's go back. Now we don't need, I mean, I did put the personal information already in, but we don't need to go over any of that. Let's just start with income. Now, when you do this tax return, first time doing it, I still suggest you read every line. A lot of these lines we don't know, and we actually will never have anything. So for example, line 1B, household employee wages. There's no examples in our book or the VITA program that would use that one. So not a big deal. But go ahead and read through this and make sure that obviously for this problem, all we have is W-2 income. But for your problem, you have W-2 and, I'm sorry, let me change my highlight color. I wanted to do that. You have W-2 income and, so there's W-2. You guys are also going to have taxable interest. So you're going to have something there in line 2B. Otherwise, for our problem here, for Alex, it's just the $76,000. Notice how all of these other lines that I read over, but I don't have anything like employer provided adoption benefits. I don't have any of those. Notice that there's no zeros in here. I just skip it. So if there's nothing to put, if I don't have any income, just skip the line, right? But as you're reading, you're going to come to lines that actually tell you to do some math, right? So here's a line 1Z, and notice how they skipped in the alphabet. That's so that they could add more as needed. We stopped at letter I, but line 1Z will always be line 1Z, and that's when you add everything from line 1. So they want you to add everything up, which for our problem is just the W-2. And then we'll go on to lines 2, 3, 4, 5, 6. We don't have anything for those for Alex. You guys will have something for your problem. And just so you know, in the very near future, we're going to have things like Social Security benefits. That's line 6. So we'll have that. And we'll have qualified dividends quite a bit, line 3A. So yeah, those are coming. But then you'll get down here to right here, adding those lines. And so you'll do that work, and that will become your total income. Also, I did skip line 8 is Schedule 1. We haven't learned about that yet, but Schedule 1 has other income like gambling income or jury duty pay, stuff like that. So that shows up there, and we do see that sometimes. What is the puppy doing right now? He's digging underneath my chair. So, okay. Anyway, so yeah, there's our total income. For our problem, it's just W-2. For your problem, it's going to be W-2 plus that interest income that you're going to have. And then because we have nothing for line 10, that also comes from the Schedule 1. Those are adjustments, things we subtract like educator expenses, student loan interest. Those are probably the most common ones, but those are showing up on Schedule 1. So we don't have that. We haven't even learned about that. So we're just going to skip that one over. So that means line 11, which is something called AGI. And we're going to learn about that in chapter 2. But basically, it's the same amount from my total income. So, okay. So we're going to end page 1 with that number. And then we're going to start page 2 with that same number. So they say, all right, and we'll learn about this in chapter 2. That number is actually a pretty important number. So it's kind of perfect that it's there. Well, let me highlight. All right, we'll come back to that later. So we're starting with that line. Oh, geez. Let me click on it. Let me move my cursor down here. Click on it. Nope, still won't let me. Okay, no big deal. So we're going to start page 2 with that number, 76,345, and we're going to move on to line 12. Let me just see if I can do it like this. There we go. Okay, line 12, it's an important line. This is where we have our standard deduction or itemized. Now, we haven't learned about itemized deductions yet. That's coming up next chapter. But so far, what we just want you guys to know is that when we claim single, we come over here to this box and we just look for the amount, right? So there it is, single, and we take the amount and then we just put it over there, $15,750. Now, you guys have been learning that all chapter, so it's okay in that standard simplified tax formula. Not a big deal. We're going to learn more about how do we know if we're single? How do we know if we're married, filing joint? How do we know if we're head of household? We'll learn about that in the future. We're just starting to get our feet wet, right? All right. So moving on, line 13 is something we haven't learned and we won't learn till chapter 6. Oh, by the way, itemized deductions, that's going to come up in chapter 5. I meant to mention that. All right. Back to line 13. We're going to learn about that in chapter 6. So that's coming soon. And then we get to line 14 and it says, hey, add those lines up. So we go ahead and we add those lines up and it's still just 15,750, right? So all we're doing is following the instructions here. And then line 15 says, all right, go ahead and subtract. And when you read this, it's going to sound confusing, but you're going to subtract line 14 from line 11B. So basically what they want us to do is take this 15,750, subtract it from that number. That's exactly what we just did on that previous page, the simplified tax formula. And we come out to $60,595. That is our taxable income. Let's see if I can circle it again. So taxable income, 60,000. Nope, can't do it. Oh, this thing, it's like you just have to do it just right. Okay, nope, still didn't do it. All right. That was my last try. Okay, so now at this point, I think I used green. No, I think I used pink, but that's all right. We'll use yellow. We take this number, 60,595, and we go and we look it up. So we look it up in the tax tables. Again, we do the tax table lookup because it's under $100,000. So when we look this amount up in the tax table, we find that they're single, right? We will end up with this 8241. So we look it up in the table and we find, okay, $82,041 is how much they owe. So again, that's line 16. That's something that we've been doing up here. Let me come back here and scroll up. We've been doing that right here in a simplified tax formula. Now we see that's where that shows up. That shows up on line 16. We look it up and I can't highlight it. So let's not try. There we go. Good enough. We look it up. We find out it's 8241 and we put it in the tax form. Obviously, this is done computerized automatically for us, but we're learning to do this by hand. So that's our tax. That's the tax. Okay. A lot of the lines from here on down are credit based, and we have not learned about credits, and we're doing this tax return assuming he's getting nothing. So we basically are skipping anything that doesn't say do some math. So you'll see I'm going to skip line 17 because I don't know anything about a Schedule 2 yet. And then line 18 tells me to do some math. So I'll do that. I'll add those lines up. There we go. It's the same number. I'm going to skip line 19 because it says child tax credit. I don't know anything about that. I'm going to skip line 20 because that says Schedule 3 and I don't have that. So then I'll end up on line 21 where, hey, you just got to add those lines up. Well, there's nothing in either of those lines. 0 plus 0 equals 0, right? And what I know is that on a tax return, if it's 0, I don't have to enter 0. I can just skip it. So I skip that line too. Then I see that I need to subtract line 21 from 18. Well, line 21 is 0, so it's perfect. I'll just have that same number from line 18 brought down. That's my tax. Notice that it says if 0 or less, enter 0. And that has to do with the non-refundable credits that we're messing with here. Now, again, this is something we're going to learn in Chapter 9. But basically what this form is telling us that if you read something like that says if 0 or less, enter 0, it means you cannot have negative. So at this point, they're telling me you cannot have a refundable portion. Basically, all I can do is bring my tax liability to 0 or my tax to 0. I can't make it negative, right? Making it negative, I got to do down here with the payments and credits in the next section. Okay, line 23 I skip because it says Schedule 2. And then the next line says, hey, go ahead and add these up. That's your total tax. So we basically went the roundabout way to come up with the same exact number we've been looking at, right? 8,241. I told you it would be a really simple tax return, right? All right, so now we have the payments and refundable credits section. So you can see in this section, I'm only going to put it in one spot. That's the W-2 for my federal income tax withheld, you know, the WH, right? I'm just going to put that there. I subtotal it, and that is it for this section because nothing else applies to me. You can read through all of it. There's nothing else that I need to do. I have no earned income credit. Alex is not part of the clergy. There's no children, so there's no child tax credits. There's no education credits. I'm skipping. And then I end up down here where it says, hey, just total all your lines, or actually tells me which 3 lines to add. And that's my total payments. So it's the same amount, right? Now we get to the point where we actually subtract. So let me try to zoom this in. Okay, is it good? Are we good? All right. So now we get to this point. We say, all right, here's what we think we owe. Our tax liability, $8,200, $8,241. We paid in total payments, $9,527. When you subtract these two numbers, we've already done the math, we end up with that number, 1,286. That is it was a negative number, right? Which told us it was a refund. So you see we're going to be in this refund area, lines 34 through 36. If that number was not negative, then it means I owe. So then I would use lines 37 and 38. So I have a refund. Line 34 is just the math. So I just subtract line 24 from 33. I did that. That's the amount I overpaid. Line 35A says, okay, of that amount, 1,286, how much do you want back? And I say, of course I want all of it, right? So most people, it's 100%. So line 34 is the same as line 35A, most people, because nobody wants to leave their money with the government, but some people do. So line 36, that's where we can say, okay, you know what, just keep my refund and just use it towards my estimated payments for next year. So we haven't talked about that yet, but estimated payments are done mostly by non-employed, non-W-2 people. So self-employed people, contract labor people, that kind of stuff. So that they make quarterly estimated payments. So basically they could wait for the refund of 1,286 to come back to them, or they could just apply it towards their April payment because they're due January, April, July. Is that right? It's every 3 months. And then, no, that can't be right. I must be off. October? I'm not sure. It's every 3 months. But anyway, let's see. It's got to be July, and then September, October. Yeah, I think I had it right. Yeah. Anyway, so those 4 quarterly payments, we can go ahead and apply towards that. So, okay, that's it. Yeah, I didn't talk about lines 37 and 38, but if you did all money, line 37 is where you would show that, and line 38, in case there's penalties like underpayment penalty, which can happen, and failure to file penalty that can pop up in there too. We would have those amounts in there. So awesome. Okay, that's it. So that is a tax return. It's a little baby one. It's a tiny one. Of course, we spent a lot of time on it because I wanted to show it to you and explain all of it to you. But that's it. So I do think that if you have access to a printer, I think you should print a blank 1040. I do have a link for one in the chapter 1 module. So if you print this blank 1040, I think that would be great. And you could just have it on hand so that you could kind of see where things go. I also think Schedule 1, which we haven't learned yet, Schedule 2, Schedule 3, and then the new one, which is Schedule 1A. Those are great too. So, all right, that's it for now.